Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Dan Burr, who is teaching me a new skill. How you doing, sir?
I'm doing great.
Thank you for doing this again every Sunday, Saturday or Sunday with me. You're very helpful. That first video where we walked through the charts, looked at our macro thesis, look at what happened, see if we made or lost money was very helpful. I appreciate that. So what we're going to do in this particular episode is I sent you two names. I sent you Wells Fargo and Disney. The reason I sent you Wells Fargo, obviously, is we had some earnings announcement. We had three big banks. Wells Fargo was the rock star. Other thing is Wells Fargo has been hit hard for years because of the bad business practices. So it was interesting to see if this might be a turnaround. So I wanted to look at the chart. I have no idea what it looks like. And then Disney. Disney is interesting because they had great timing with Disney Plus in the lockdown. They've had Spider-Man be a rock star movie. And I'm just curious how Disney looks given we're coming out of this lockdown, movies, all of that. But before we do that, Dan, you put together a newsletter. You have this risk calculator, all this amazing stuff. How do you want people to reach out to you if they want to get a copy of that?
Yeah, let me hang on one second. Let me share my screen and I'll show an excerpt of the newsletter.
Perfect.
You can see that there.
Yeah, so it's breakpointtrading@gmail.com. It is a weekly newsletter that I've been getting for over a year. And the risk calculator, which we've looked at in detail a couple of times, and we will do it again if we decide to put on a trade. So breakpointtrading@gmail.com. So thank you.
I'm working on this weekend now. The good news for stock traders is tomorrow we can't lose money.
I love that. Can't lose money tomorrow. Nobody can.
Nope.
Market's closed.
Market's closed. So I'll have time to do more research tomorrow, but I'll probably put the newsletter out today. But this is an excerpt from last week talking about the January effect, and I kind of give a market summary of where we're at from a number of different sources, and then I add my own commentary and charts and things like that.
Yeah, I love it. I've got it for years. Right now I look at it about every other week, but given we're doing this, I need to look at it probably every week. So I will be doing that. So let's talk about Wells Fargo and Disney via the charts. Which one do you want to look at first?
Well, first I want to show, this is VTI, which is an ETF of the whole market.
Oh, okay.
It's from Vanguard. So this covers not just the S&P, not just the NASDAQ, not just the New York Stock Exchange, not just the Russell and the small caps, mid caps. It's everything.
Everything.
Wow. Everything, every single thing in the universe. So I like looking at this sometimes just to get a sense for what the whole market is doing. It typically usually looks similar to the S&P, but the S&P is only 500 stocks, and this is, I don't know, 9,000 stocks.
Okay, wow.
I mentioned in the last episode about, even though we've had this sell-off the last couple of weeks, the accumulation distribution, which is this line right down here.
Which one? Sorry. Oh, that one. Okay. Yep.
This panel down here.
Yep.
And the pink line is the 50-day moving average.
Oh, look at that.
Of the accumulation distribution. So what that means is all of the big hedge funds and mutual funds, when they're buying, they're accumulating. When they're selling, they're distributing. So it gives you a sense of the ratio between buyers and sellers.
Interesting.
If it's going up, that means more people are buying than are selling. More people are accumulating than are distributing. Mostly in charts, most of them are, they look backwards in time. Right. So they're not leading indicators, they're lagging indicators by definition. Right. There are a couple of things that are leading indicators though, and one is accumulation distribution.
Now you said that's Wall Street. Is that just because that's where the big money is, or could that be retail? Or is retail a big enough segment to move this chart by themselves, or not really?
Not really.
Okay, I didn't know. All right.
Not really. It's really the big hedge funds, mutual funds. Those are the ones that move the market.
Yeah.
They're the big elephants. You know, there's a saying,
9-figure trades and all that. Yeah.
When the elephants dance, the mice get swished.
Gotcha. Okay. All right.
So if you'll notice here, even as the market was selling off here, and I talked about this before on the NASDAQ, that it went down and hit the 200-day moving average. Now on this one, on the full market, the 200 is way down here.
Oh,
pink line. So it's got a long way to go. The 50-day, which is what most of the big hedge funds usually use, and you can see back here when we're having that big run,
Mm-hmm.
the 50-day moving average is very reliable place to buy the dip.
Oh, look at that.
Buy the frickin' dip. Right?
It
Every
looks
time it hit
like
the 50-day.
yeah, it looks like we may have been broken that now, or is it too early?
Yeah,
to
we
tell?
broke that in September,
Mhm.
and then it came back up above it again, and then kind of traded sideways, broke it here in
Yeah.
December, traded sideways, broke it again, broke it again. All right, so we're starting to break it more often now, and we're starting not to make as many higher highs any
Yeah.
longer, although we did get one more higher high. So we'll have to see if the next
Interesting.
high over here is a lower high or a higher high.
Okay.
But this very reliable buy the freaking dip
Mhm.
no longer really applies. So it
Got
broke
it.
through the 50-day, but it hasn't broken through the 200. But the important thing about this that I want to point out is this accumulation distribution.
Okay.
Even though in the last couple of weeks we've been selling off pretty heavily, you can
Mhm.
see the volume down here. It's pretty heavy on the red candles,
Okay.
right? The accumulation distribution is still seems to be trending up,
Mm. Okay.
right? It hasn't really broken below this 50-day line.
Okay.
Now it's starting to curl over a little bit, but if the big institutions are buying even as the market is selling off,
Mhm.
that means they're positioning themselves for more upside. So we'll have to see how that works out. I just thought it was an interesting observation. I kind of expected with the sell-off, and it feels like a bigger sell-off than it really actually was.
Mhm.
But if it really was that big of a sell-off, I would expect the accumulation distribution to drop below the 50-day moving average.
Mhm. Okay.
So we can look at NVIDIA, for instance. You can see that the 50-day, the accumulation distribution on NVIDIA
Interesting.
has definitely dropped below the 50-day.
Interesting.
And you can see what that chart looks like.
Oh, just for fun, put in Tesla. Everybody talks about Tesla.
Yeah, good idea. Tesla's well above.
Oh, well above. Look at them.
Big accumulation. Even with this big sell-off we've had recently,
Huh.
it's still being accumulated.
There you go.
All right. Any others? Let's do Wells Fargo, just
Yeah,
out
what
of
the heck?
curiosity.
I have no idea.
Wells Fargo had a
Ooh.
huge run.
Yeah.
It had been selling off.
Mhm.
It had been below its accumulation line.
But might be
But now
accumulating.
you can see right in here,
Mhm.
it started ramping up and it got
Yeah.
above the 50-day again.
Look at
So
that.
all the big institutions started accumulating Wells
Okay.
Fargo back in here before earnings.
All right. Well, let's do Disney's, given I've given you two names.
Okay. There's Disney.
Oh, look at that.
Disney,
Pounced above.
it's starting to come back above. You can see this big
Yeah. Selling,
curvature. You can see how it's curved down. So it's been selling pretty heavily.
Look at
I'm
that.
a little concerned about Friday's candle, even though it ended as a hammer, which could be positive. We have to wait till Monday to see if it follows through.
Interesting.
But it had a big gap down, big sell-off on Friday, then it came all the way back on Friday.
Okay.
There's some things about Disney I don't really like.
All right.
But if we go just for 1 second back to the VTI, which is the overall market.
Yep.
Down here this is the ratio between consumer discretionary and staples, right? So when it's trending up, then consumer discretionary is outperforming staples. And usually whenever you're moving towards a bear market, staples, things that everybody has to buy, whether we're in a recession or not. And the one on the bottom is growth versus value, growth stocks versus value. So think of that as like technology stocks versus healthcare, or materials, things like that.
Okay.
You can see that one is also below its 50-day moving average.
Yeah, it is.
So value is outperforming growth, and staples are outperforming discretionary.
Which you would expect. Okay, I would expect given what we have.
That's not a good sign in general for the market.
Okay.
And then the last one here is Spectravest, which is something I subscribe to. This is all based on it's combination of technicals and fundamentals both, but it's was created by an engineer. It's all based on math. essentially. But they have been pretty accurate in determining where the bottoms are.
Okay.
You can see right here, they have a confirmed down signal. And it's been a confirmed down signal for quite a while.
And this is daily trade.
This
These
is
are
daily.
market open days, not
This is
weekends.
every day. Yeah.
All right.
So they're still in confirmed down. So
What's the red with the star? That looks like a different, I don't know what that
so
is.
yeah, the star is the price movement confirmed by the RT kicker combo. It's another combination.
It's another
of
thing.
different
Okay.
things. Yeah.
All right.
All right. Now, one of the things that's interesting about this is that whenever this BSR, the buy sell ratio,
Mhm.
so this is the percentage of buys versus sells,
Mhm.
right? Right now it's at 0.5. It's on a scale of 0 to 2.
Okay.
So it's on the bottom 25%.
Yeah.
But when this gets down to 0.2 or below,
Mhm.
then it very consistently has indicated a bottom.
Okay.
It's not there yet.
No, not there yet. Got it.
So we may not be at the bottom yet. We may have more to go.
More to go. Okay.
And we talked about the inflation numbers probably get worse before they get better
Yes, they are.
over the next
Yeah.
2 or 3 months.
Yeah, folks, go back and watch last week. We talked about this thing called base rate that is going to be a negative helper for a couple more
Right.
months. Okay.
So this is something to watch, and I'll put this in the newsletter whenever we get down. If we get down to clear close to 0.2,
Okay.
that's the time to start, putting together your buying lists.
Got
that
it.
you want to buy because we're getting close to a bottom,
Okay.
but we're not quite there yet.
All right.
All right. At any rate, those are the two.
Mhm.
So let's look at Disney first.
Sure. See if we want to do anything there.
Yeah, and actually I'll go back to my charts over here, Disney, and look at my default chart.
Uh-huh.
So Disney doesn't look very good at all.
Now you say that, and my fans are looking at the channel and they're like, what do you see that it doesn't look very well? Like one or
Yeah,
two things.
if you just look at the colors, first of all,
Okay.
these reds mean it's going down.
Got it.
If you look at the slope of the lines,
Yeah, it's not.
they're all going down.
All right.
You want to see the faster moving averages above the slower ones. That's why it turns green up here.
Got it. Okay.
In this case, the faster ones are lower. Now it was just starting to recover right in here.
Mm-hmm.
But this pink line right here, this is the 50-day moving average. Remember I said the big institutions look at that line,
Mm-hmm.
and that's where they will either add or sell.
Got it.
All right, so you can see it went below the 50-day right here,
Mm-hmm.
trended down. It came up to it, bounced
Rejected
back
it.
down,
Yeah.
came up to it, bounced back down, came up to it, bounced back down. Big institutions are selling every time it gets to the 50-day.
Interesting.
Same thing happened on Friday. It looked like it was going to break through the 50-day, but instead it sold off.
Got
Now
it.
we did have a hammer, which means there was buying at the end of the day, which also turned this accumulation distribution up because the buyers were coming in. But I'm not convinced yet. If you're really an aggressive trader, and you said that's a hammer, and I think Disney is ready to reverse, and I'm getting in right here.
And
It
where's
might
the
be
50-day on the chart? It's that pink line?
50-day is this pink line right here,
The pink solid
that.
or the pink dash?
the pink dash.
Got it. Okay. Got it.
They're all converging right in here
Yeah.
at around 155.
Now, let me just, again, I'm just going to ask silly questions because I'm learning. So the fact that they're all converting, does that maybe limit the downside?
If it was above it, it would be a great place to set a stop. Yes.
Okay.
If this had gone up instead of down here,
Mhm.
and we bought it like at 160,
Okay.
then this where the 50-day is would be a great place to set a stop,
Okay.
because that means the institutions are getting ready to start buying again.
Okay.
That means every time it comes back to the 50, they buy and it'll bounce up.
Okay.
But they're not doing that yet.
All right. So Disney's, I'm just going to call it messy, and we don't play with messy.
Yeah, I'd say it's messy. I think a lot of the indications are it might still have more downside left.
Okay.
I'm
cool with that.
I'm not going to explain all of these. We can do that on another
No. This,
Um,
I'm still in preschool, so be
yeah.
kind.
The RSI is one that should be on everybody's chart. This is the relative strength indicator.
Okay.
And Investopedia is something I love to go to just to understand things, but it will give you an example. It'll help you understand what the RSI is.
Okay.
It basically helps you understand the strength of the stock. So RSI is one that I always will look at. In this case, RSI is going down. Usually if it gets down in this area right here, that means it's oversold.
Okay.
You can see it started to bounce back up.
Got
But RSI and any oscillator, these are called oscillators, which means they go up and down between two ranges, in this case 30 and 70. They work great in an oscillating market, which I think we're going to actually have in 2022.
Yeah.
So these kind of oscillators, that and the MACD, which is down here, may actually work really well this year.
Now, to translate oscillator in my simple mind, that is just a range bound market.
That's right.
Okay.
It's a range bound market. That's what oscillators
Sideways, whatever.
They tell you when it's, getting ready to go the other way.
Got it.
When it gets up near 70, it's getting ready to go back down.
So you're in, out.
You kind of
in,
see it
out.
right here. Yeah, when it gets down to 30, it's getting ready to go back up.
Got it.
Oscillators do not work very well. This is a big issue and something you need to learn. They do not work well in a trending market. Like last year, we had a trending market. Market was going up. I showed you where every time it hit the 50 day, it would bounce back up.
Right.
In a trending market, this could stay up at 70 throughout that whole term, that whole time. It could go to 70. You could say, oh, now it's going to reverse. I'm going to start shorting. Well, it's not. It's a trending market. It could stay at 70, through that whole time.
So you need to know the market, right? Is it going?
You
Is the
need to
market
know-
in
you
up,
need to know the
down,
market.
sideways?
Exactly.
So much
You
stuff.
You need to know the overall market.
All right. So we're not doing anything with Disney today. Cool.
Yeah. So here's Wells Fargo. Wells Fargo, on the other hand, looks really good, except that it is overbought.
Oh, it's above its range. Look at that.
It's above its range. But like I said, if it's going to trend for a while, it could stay above its range for a while.
Okay.
So what this means is, and the other things I look at a lot down here, this is Wells Fargo compared to VTI, compared to the 9,000 stocks in the market. It's above its pink line, well above it actually.
Yeah. So
it's outperforming the rest of the market. This is Wells Fargo versus its industry group.
Yep.
The banking industry group.
Oh.
It's well outperforming the banking group. This is the banking group compared to its financial sector, the sector that it's in. It's outperforming the group. The industry is outperforming the sector.
Nice.
The only thing that's kind of down is the industry. Well, actually, this is good because the sector is actually underperforming Wells Fargo.
Right. Okay.
Wells Fargo is actually doing better than its sector.
All right.
So all of that is really positive for Wells Fargo.
I like it.
So what do we want to do with Wells Fargo?
I would like to buy some Wells Fargo.
Okay. Well, what I would suggest, and we could miss a run by doing this. So I'm going to give you two options.
Okay.
And I'll leave it to you which one you want to go.
Well, I can tell you right now, I want to do what we did with whatever that was, QF or whatever the one we did last week.
QID.
Yeah, where we had two, right? Where we have one below the close and then maybe one a little, just so we catch the run if it happened. Is that one of the options you were going to give me?
No, it's not.
All right, well, give me your two options then.
I was going to say you can either set a buy point somewhere down here.
Okay.
And let it pull back to that buy point.
Yep.
Like around 56.
Okay.
And then buy in here.
Yeah.
Or you could set a buy point a little above. Now we could do both.
That's exactly what I just said is I want to make sure we get one of the tranches or whatever you call those things.
Yeah.
And then
the danger with that is
go ahead.
The danger with that is you get both.
That's why we're right sizing the purchase.
Right.
Which I would have never done before. This is why it's so valuable.
They just had earnings.
Yep.
So they just had earnings. Earnings were great.
Yep.
So very well. And look at the volume. The volumes.
Yeah.
So that's good.
Okay.
The indicators are overbought, but if it's going to go on a run, I mean, it's already been on a fantastic run. So you can see, what I want to know is how do the big institutions know that the earnings are going to be good? How do they know when they were buying all the way up here?
Whispers, man. Whispers.
Exactly.
Those barroom conversations.
All right. So you want to buy Wells Fargo?
I do. And let's bring up your whatever that's called again.
Yeah. So what we want to know right now, it's at 5806.
Okay.
So here's the risk calculator.
Yep.
Actually, 27,183. By the way, the risk calculator is based on what's in your account.
Exactly.
And so that will change.
Mm-hmm.
If you do really well, if this goes to 30,000, then we've got to change it to 30.
Nope, no
right?
problem.
If
Yeah,
it goes to 25, then we have to change it to 25.
exactly.
So
Well,
right now it's 27,183.
Yes. This is all new stuff to me, and I'm so thankful for this. Yes.
We'll put in Wells Fargo up here.
Mhm.
This will help give us a chart. We just want to look at it. So there's the chart. See, it broke out. 52 is the place to buy it right here when it broke out. That's the break point. That's the name of my company, Break Point.
There you go.
So that was the break point. So the ATR is 142.
You can close that little ad that's playing in the lower left window. Thank you. Distracting.
Yeah.
Okay.
All right. So the ATR is 142. ATR is the average true range.
Got it.
The range the stock typically moves in. There's a link over here that you can go to and learn more about that. All right. And by the way, you can't click on anything except for what has the white bars in the middle of it.
Yeah.
So previous day's high was 5806. We said.
Yes, we did.
Or actually 5806 was the close, but
That was
we'll
the
use the close.
Yeah.
All right, we'll use a 7% stop.
Okay.
That's what Investors Business Daily suggests.
I like it.
That puts our stop price at 54.
Okay.
Or we could use 2 times the average daily range.
Okay.
Right, so it moves $1.42 on average between top and bottom, between high and low.
Okay.
If we take double that,
I got
it's already calculated for you. It's right there, 55.22.
Okay.
We can just manually enter 55.22, and now it shows a 4.8% loss instead of a 7% loss.
Okay. I'm with you.
All right. Either way, in this case, it's still 40 shares, no matter what we do.
Got it. And we're always going to buy in 2 tranches, so that's 20 and 20.
We'll do 2 tranches. So this is the most important part. This is the heart and soul of the risk calculator. How many shares do I buy?
Totally agree.
And it will take these 3 rules. The 1%, don't risk more than 1% on any one trade. In this case, it's only $272. Don't risk more than 10% of your whole portfolio. Think of this as if this stock goes to 0, I'm only going to lose 10% of my whole portfolio.
Right. Okay.
All right. 2,700. And then this here is a volatility rule based on the range of the stock.
Okay.
All right. So 40 shares we can buy. We're going to do 50%. Those are our ranges. So 50%. So 54 on the downside. Well, which one do you want to pick? Let's pick
54.
Let's pick 54.
Yeah.
54
So
will be that'll be our stop loss.
Correct.
And 59.22 will be our first buy on the upside.
So we're going to buy one at last week's close, right? And then the second buy would be a validation of uptrend, which would be higher. Is that what we're saying?
That's right.
Okay.
And we're going to put a stop at 54.
Yeah.
All
and
right.
to stop. Yeah, I like that. Okay.
So let's buy at 58.
Yeah, let's buy at 58. Perfect.
All right. 53.94 and 59.16.
Perfect. Okay.
All right.
Yep. You know what? I don't think people need to watch us do this trades because we're going to show them what we did last time. But this is everything we're going for, right? Or is there something else?
No, that's pretty much it. I mean, we do the trade doesn't take long. So
okay.
58, 53.94.
All right, do it.
So I want to buy 40 shares.
No, 20.
Oh, 20. I'm sorry. 20 shares, half of our. Buy 20 shares at $58.
Yep.
With a stop loss of 20. What did we say the stop loss was?
54 or something, I thought.
53.94.
Yeah.
All right. So stop loss here is 53.94.
Okay.
And we are going to do,
So that's a limit order.
that is a stop order. So on the downside, it's a stop.
Okay.
On the upside, it's a limit for sells.
Oh, because it closed at 58.06. We're below the okay, got it.
We're gonna buy it at 58.
Yep. That's
We're
our
hoping to buy
first.
it.
Right.
We're hoping to buy it at 58. You can
So
see
if it
here
runs in the morning, we don't get this one, but we'll get the other one.
we'll get the second one, right?
Got it.
And that's where the profit exit. That's where we'll put that in. So the profit exit amount was 59.16.
So what is that? What is the 59.16?
That's the upside buy price.
Okay.
59.16.
Okay.
Oh, I'm sorry. That's the exit.
Yeah, that's
Right. Yeah.
Okay,
So this is our whole order. So this is one order.
okay.
So
So
stop. We got a stop loss at 53.94.
Mhm.
Good till cancel.
Mhm.
Right. We're going to buy it at 58.
Mhm.
So we're hoping it comes down 6 cents.
Okay.
On Tuesday.
Yep.
The stop price of 58 is less. Oops. This should be a limit order.
Yeah, I love it.
58. All right, place that order. There's our order.
Okay, cool.
58. And now we'll do another buy. This time it's a stop.
Because it's above.
59.16. And we'll leave the stop price the same.
Yep. Yeah, we want to be out at the same time. Yep.
All right, so then now there's 2 orders in here.
Okay.
2 buy orders.
Perfect.
We got a buy at 59.16 and we have a buy at 58.
And then we have a stop again, going back to the risk chart.
Stop at 53.94.
Very cool.
So whichever way it goes,
Yeah.
goes down to 58, we're in. If it then takes off and goes to 59.16, then we're in for the full.
Yeah. Sounds
full
good.
tranche. All right.
Very, very cool, folks. So tune in next week to see how we do. Again, want to pull up your PowerPoint with your email just in case somebody wants the risk calculator, which I think is hugely valuable. There it is, breakpointtrading@gmail.com. Get yourself this, come learn with me. Again, open disclosure, I'm learning something new that I haven't done before. So any closing thoughts, Dan?
Nope. Good luck next week. It's going to be an interesting week, I think. I'm really curious to see if that 200-day moving average is going to be the key for all the big institutions, and they're going to start getting back in again.
Very cool.
So
All right, man. Well, thank you very much. And you have a wonderful week. And again, remember, you can't lose money tomorrow.
That's right.
Thanks, bud.
Take care.